Picture the exact moment. You open your banking app, or you get that final confirmation email, and the balance on that loan, that card, whatever it was, reads 0. Not paid this month. 0, permanently forever. For years, that number sat in the background of every decision you made, and now it's just gone. So what actually happens next? Not the Instagram version where confetti falls and your whole life instantly transforms. The real version, the one that plays out over the following weeks, months, and years. That's what we're getting into today, because the payoff moment gets all the attention. But what you do in the months right after is what actually determines whether this becomes a turning point or just a temporary high. The first thing that happens is almost always anticlimactic, and nobody warns you about it. You expect to feel triumphant, and for a day or two, you probably do. But then a strange quiet sets in. For months, maybe years, that debt gave your financial life a kind of structure. You knew exactly where a chunk of your paycheck was going every month. There was a target, a countdown, a reason to say no to things. Once it's gone, that structure disappears with it. And a surprising number of people report feeling almost directionless for a few weeks. Not because they miss the debt, but because they miss having a clear financial mission. This is normal, and it usually passes once you give yourself a new target to aim at. It's worth naming this feeling in advance, because if you don't expect it, it can feel like something's wrong when really it's just your brain adjusting to the absence of a routine it had gotten used to. Here's where the real fork in the road happens. And it's the single biggest factor in whether paying off that debt actually changes your life or just quietly resets to the same patterns that got you into debt in the first place. That freed up money, whatever you were sending to that loan or card every month, has to go somewhere. If it just dissolves back into your regular spending without a plan, absorbed into slightly nicer takeout, a few more subscriptions, a slightly bigger apartment, you'll likely find yourself in a similar financial position within a couple of years, just without the debt label attached to it. This isn't a moral failing, it's just what happens by default when money that used to have a job suddenly doesn't. Lifestyle creep doesn't usually arrive as one big decision. It arrives as a dozen small ones that each feel harmless in isolation. The people who see their life meaningfully change after debt payoff almost always do one specific thing. They redirect that exact dollar amount immediately into something with a name and a purpose. Not vaguely save more, but a specific number going to a specific place starting the very next pay cycle. That might mean building an emergency fund if you don't already have 3 to 6 months of expenses set aside, which financial planners commonly recommend as a baseline cushion against job loss or unexpected costs. It might mean funneling that money into a retirement account, especially if you're not already capturing your full employer match, because that match is essentially free money you're otherwise leaving on the table every single pay period. It might mean tackling a second debt if you had multiple, using the same amount you were paying on the first one, a method often called debt snowballing, where paying off one debt increases the fuel available for the next, creating momentum instead of losing it. Let's talk numbers for a second, because they make the abstraction concrete. Say you were paying $400 a month toward a debt. That's $4,800 a year, redirected into a retirement account earning a historically reasonable average return over the long run, something in the range of 7% annually after inflation, which is roughly the long-term historical average for a diversified stock market portfolio according to widely cited market data. That $4,800 a year, invested consistently for 20 years, could grow into well over $200,000 purely through the combination of contributions and compounding. Give it another decade, 30 years total, and the number gets considerably larger still, since compounding accelerates the longer money stays invested. That's the quiet, unglamorous version of what your life after debt can actually look like if you redirect deliberately instead of letting the money drift. There's also a psychological shift that tends to happen, separate from the math. Debt, especially the kind that hangs around for years, tends to quietly shape your identity. A lot of people who've carried debt for a long time describe an underlying low-grade anxiety about money that persists even when the actual numbers are fine, sometimes lingering well after the balance hits 0, almost like a habit the mind hasn't caught up to yet. Your credit utilization drops once that balance is gone, which can meaningfully help your credit score, since amounts owed makes up a significant chunk of most scoring models. But the deeper shift is behavioral, not just numerical. People who've paid off meaningful debt often describe becoming more deliberate spenders afterward. Not out of fear, but because they've directly experienced what it feels like to reclaim a chunk of their income, and they don't want to hand that feeling back without a fight. There's a kind of hard-won clarity that comes from having lived on both sides of that line. Now, here's the counterintuitive part, the thing that trips people up, even when they know all of this in theory. Paying off debt doesn't automatically make you good with money. It removes an obligation, but it doesn't install a system. Plenty of people pay off a card, feel great for 6 months, and slowly drift back into carrying a balance again. Not because they're careless, but because nothing structural changed except the absence of that particular bill. The underlying spending habits, the ones that led to the debt in the first place, are usually still fully intact unless they were specifically addressed. The debt-free feeling is temporary if it isn't paired with a plan for where that money goes next. This is exactly why the redirect step matters so much more than the payoff moment itself. The payoff is an ending. The redirect is what actually determines your financial trajectory for the next decade. And it's the part almost nobody talks about because it's less dramatic than the debt-free milestone itself. So if you're staring down that last payment, or you just made it, here's the practical version of everything we just walked through. Before you even make that final payment, decide in advance where that monthly amount is going next, so there's no gap where it drifts back into regular spending unnoticed. Prioritize an emergency fund if you don't have one, since it's what prevents your next unexpected expense, a car repair, a medical bill, a slow month of freelance work from putting you right back into debt. Check whether you're capturing your full employer retirement match, since that's usually the highest guaranteed return available to you, often outperforming almost any other financial move you could make with that same dollar. And give yourself permission to actually feel the relief for a bit. That part is real and it's earned. Just don't let the feeling alone be the whole plan going forward. I want to be clear that everyone's situation is different. Your income, your other financial obligations, your risk tolerance for investing versus saving, your timeline for other goals like a home purchase or starting a family, all of that shapes what the right next move actually is for you specifically. There's no single universal answer for exactly where that redirected money should go, only a framework for thinking it through deliberately instead of letting it happen by default. This is general information meant to help you think through the decision, not personalized financial advice, so it's worth talking to a qualified financial advisor about your specific numbers and goals. If this helped you think about what comes after debt instead of just how to get there, consider subscribing. We break down exactly this kind of stuff, the parts after the finish line that nobody really talks about, every week.